You know, one of the reasons the market, of course, has been going higher is the enthusiasm around AI. And joining us now to sort of talk about that and what's been going on in the overall market is Jim Stewart, New York Times columnist. Jim, good to see you. Been a long time.
Yeah, nice to see you too.
You know, what do you make of it all? In particular, the fuel that seems to be being provided to this market by excitement around generative AI in particular, and what that has meant for the likes of Microsoft or Alphabet or NVIDIA?
Well, there's no question that the big tech stocks, and especially the AI beneficiaries, have been getting all the excitement and have been leading this rally. But one of the things that I found so interesting about it is, like, I'll occasionally, turn to people and say, "Oh, what do you think of the stock market rally?" Or, "Is this incredible?" And they all kind of say, "Well, what rally are you talking about?" And it's been really strange in my experience at how little impression this has made on the general investing public. I think partly because it's been very narrowly focused on the beaten down tech stocks, and the broad market has not really participated. And also because the bond market did so badly last year at the same time that people's asset allocations didn't really change that much because it all went down and they just kind of stopped looking. And this, to me, is actually a sort of ideal setting for a rally because it's the old, stocks climb on a wall of worry cliche.
So I hear Mr. Stewart getting kind of bullish. Am I right?
Well, I was bullish when stocks were really down, but the S&P 500 is now up almost 25% from its lows. And when it goes up 25% is when I start thinking about, whoa, it's time to pull back a little bit. Not because I'm not optimistic at all, but just simply to keep things in a normal balance. So I would encourage everyone to, if they haven't looked lately at their asset allocation, take a look, and they might be surprised, especially if they have big index funds in the S&P 500, at how the equity portion has gained a lot, because bonds have not gained nearly as much. They're doing a lot better this year. But if you have the fixed income thing, you may find that you're underweighted in equities, in which case I would encourage rebalancing even at this standpoint. But, turning to AI for a minute, I am very bullish about AI. I mean, I read these apocalyptic predictions that AI is going to mark the extinction of the human race. I'm not ready to go there. I do feel that it can produce huge productivity gains, including in our own field of journalism. And I think that's what investors have gotten very excited about in the near term. They're putting the apocalypse off on some future generations.